This is Alan Bush with ADMIS. In the stock index futures, seeing prices lower this morning. Much of this pressure linked to economic reports in Asia and in the Eurozone that came in surprisingly weaker than anticipated. We are hearing more and more of the possibility that the U.S. economy may be slowing a bit. For one thing, we had transportation companies recently reporting either weaker than anticipated earnings or outlooks that were lowered. We do have a chart pattern in the stock index futures that suggests that there are probably more sell stops below the market than buy stops above the market. So we continue to feel that the risks are to the downside. Any surprises are likely to be bearish for stock index futures in spite of the recent announcement of a third quantitative easing plan from the FOMC. Over in the currencies, the euro currency sharply lower. We did have a report showing that the Euro area services and manufacturing index declining to a 39-month low. We continue to feel that the European economy will continue to deteriorate. That is likely to put some additional pressure on the euro currency in spite of the European Central Bank's recent bond purchasing plan. We're also seeing the Australian dollar and the Canadian dollar coming under some pressure. But the Australian dollar was by far the weakest of these two, being closer in proximity to the economic problems in China and also in the Eurozone. So most likely the Canadian dollar, we feel, will continue to advance on the Australian dollar. And I think this is a trend that is likely to last for several months at least. There is more pressure on the Reserve Bank of Australia to lower interest rates, and there is an increasing chance that at their next policy meeting that they will actually cut their base lending rate by 25 basis points. Over in the credit markets, all of these problems, as far as what we're seeing in China and in the Eurozone, as far as a weakening economic situation, is causing the credit markets to advance. Another bullish factor is lower stock index futures helping treasuries, prospects of easier credit in other European central banks, all of which contributed to better prices for the credit markets. We continue to feel that the main trend is higher for treasury futures, especially for the longer end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.